Hello and welcome to another episode of the Real Estate Investing Club. I'm your host, Gabe Peterson, and this is the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items for you. First, if you like this episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running far into the future. Second, if you're a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, I've created an ebook just for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All I charge is our admin costs to keep this show running. So if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says get the ebook in the upper right-hand corner to grab yourself a copy. With that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right. Welcome back to another episode of the Real Estate Investing Club. Today we have with us Brock Mogensen. Brock has been investing in real estate for over 2 years in the Milwaukee, Wisconsin market. He specializes in underwriting and incorporating data models for asset management. As a principal at Smart Asset Capital, the firm currently has over $8 million in assets under management, and they focus on multifamily, retail, commercial, pretty much anything you can think of when it comes to real estate investing. So, Brock, I am excited to have you on the show today. How are you?
I'm doing well. Thanks for having me on, Gabe.
Absolutely. We always start with stories here on the Real Estate Investing Club. So why don't you take us back to the beginning? How did you get started in real estate?
Yeah, so it's been a few years now. I started with a duplex and did the whole house hack model. So
Nice.
lived in one side, rented out the other. And really, did that. Didn't really know much about, my knowledge of real estate was pretty minimal at that point. Just kind of, always looked at it and kind of was like, let me try this at least. And I quickly kind of learned the power of, cash flow and appreciation and everything. And through that time, I kind of decided, all right, I want to dive deeper into this. I see the power of it. So that's where I spent some time kind of learning. I quickly found out there's a million different ways you can go in real estate. So I was like, well, let me kind of pick a path and, go down that path. But the first path I think a lot of people kind of gravitate towards starting out is I tried like the wholesaling, flipping thing. Tried that for a few months, couldn't really find a deal. And then through that time, kind of came across the concept of syndication. And then that kind of caught my attention. Saw it as a way I could kind of go after larger deals quicker. And that's where I spent right away. I kind of learned that to be able to get into that space, I wasn't gonna be able to do it on my own. So I thought, let me kind of learn one piece of that, of the process of syndication, and I'll go out and partner with someone who's maybe lacks that piece. The piece I chose was the analysis of deals, underwriting. So that's where I spent the next 6 months or so, really just, learning as much as I could about that piece of it. Then I went out, networked, partnered with the right people, and scaled from there.
Man, I love that. I like that you kind of had the wherewithal to understand that, taking down something, when you get into large assets, so you focus on multifamily, so large multifamily assets, you need a team. You hear these guys that they're single solo investors. They go out there, they buy properties, but they're usually buying the single families. And when you get into these larger assets, it is difficult to do it without a team around you. So I love that you saw that, you chose one niche. You said, I'm going to get strong at underwriting. And then you kind of got other people around you to take the other aspects of the deal. So congratulations on that. That's a lot of wisdom that you employed there. And I like that you chose underwriting because I've said this multiple times on the show. Underwriting is one of the most important things you can do. Getting your due diligence right, understanding the asset before you actually dive into the asset, before you close on it, is so important when it comes to real estate. So let's talk about that. Let's talk about underwriting. That's your specialty. How do you go about underwriting a property? I know that's a loaded question because there's 100 different things you have to do, but what are the main things that you look for when you're talking about multifamily?
So I think it kind of starts with first having an idea of what your strategy is when you're coming into underwriting. So for us, a lot of other operators are looking for value add components, value add deals. So that's a lot of times you can tell right by looking at, usually you're going to get an offering memorandum or a trailing 12-month financials. You can usually tell pretty quickly if the numbers are going to make sense and where there might be a value add component on the surface. So that's usually the first thing. Is obviously first you're going to define your criteria. What type of deals are you looking for? And that's going to weed out 80% of the deals because they don't fall within your buckets you've defined. After that, you might define, all right, I want to have some sort of value add component, or I don't necessarily like putting like a cap rate on deals. I think a lot of people, brokers will ask what type of what's your cap rate minimum. And for me, it's kind of like, well, I could see a four cap that I think has a lot of potential to turn into value add, so we could end up buying that. So I don't really like putting cap rate. I think it's good for certain things, but I don't like to put a barrier on that. But I think really just kind of at first looking for something where you think there's value add in it, and then as soon as you see a glimpse of that, then you kind of can dive into the deeper processes of actually fully underwriting a deal, which could take several hours depending on the deal.
I like it. I like it. So you guys start with your criteria, you start with your strategy, and your guys' strategy is value add. Are you guys doing long-term holds or are you flipping?
More longer term. Generally, the deals we've done have been on a 5 to 10 year horizon. We haven't really come across anything. I mean, that's not to say, some of the deals we have now in our portfolio, we could end up selling earlier than projected. Obviously, anyone's ready to sell if the price is right. But yeah, the approach we take, at least in, pro forma stage, is a little bit longer term compared to maybe some other operators.
Yep, yep, yep. And I also like that you don't, I mean, I'm sure you do care a little bit about cap rate, but I like that that's not the deciding factor. So many people, they'll look at a 12 cap, they'll be like, boom, I'm buying it. But then they get into it and it's, there's no floor. It goes straight to hell down there. So um, I like that you guys look at it a little bit more holistically, because even low caps, as you were talking about, even you can look at a low cap rate, maybe a 4 cap. But if you have good value add in there that really bumps it up, it's still a deal. The cap rate is not the end all when it comes to a deal. So when it comes to value add, that's you guys' focus. What are you looking for? What are the big value add factors that really push the needle for you?
I think there's the obvious ones, right? Like low rents, high expenses. And those are kind of the first ones you're going to look at, right? If rents are below market, that's a real, I wouldn't say easy, but that's kind of one you can quickly evaluate and determine a strategy for. Um, there's just so many of them. I mean, you can look at like adding additional fees. Like we have some deals where we've built in different fees, adding vending machines and different things where that might be a value add component. Um, some the reducing expenses can be one as well, where you come in and you think you can cut off some of these expenses or bring something in house. I think there's just a lot of different, adding parking fees, stuff like that, where it could be managed better. Maybe the previous management wasn't managing it well, and there's a rough tenant base in there, and you're going to come in and turn it around. And that could be your value add component that's going to attract a better tenant, ultimately leading to higher rents down the road. One thing, so I think you just really got to look at it. I think it depends on the asset class, depends on the location. Everything is a factor, but that's where I think you can get creative and come up with ideas to add value. Because at the end of the day, with commercial, it's all about the NOI, and that all really falls on the operator.
Yep.
So I think that's kind of the way you have to look at it, is have an open mind. And yeah, there's those easy ones you can pick off when it comes to value add, but also think outside the box, and see if you can come up with anything creative.
Yep. No, and I like that. Let's dive a little bit deeper. I mean, you talked the main buckets you already went over. You got to increase the rent, decrease expenses, and then maybe add ancillary income from other revenue sources. So let's start with the other income. What do you guys what are the opportunities that you see when you look at a multifamily that can increase the revenue without increasing the rent of the property itself or of the units itself?
Yeah, I mean, so like parking, you could increase the rents on parking if we came in and they were charging $15 a month for underground parking, and the property down the street's charging $30 for underground parking. Increase that. we're looking at, right? We haven't fully executed on this yet, but adding vending machines into some of our properties. I don't necessarily know how profitable it's going to be, but it's something. I mean, every dollar is, you divide that out by the cap rate, and that's instant value there. So stuff like that. We've implemented move-in fees. So instead of taking a whole security deposit, we divided it into a move-in fee. Um, Renters insurance. So no, if they don't have renters insurance, we charge them $15 a month. Trying to think. I mean, yeah, I think those really are the main ones. We're looking at opportunities to lease out roof space for new 5G network, cables that are going to go in. So just really, there's just so many different ways to add in different fees. But like you said, you want to be careful. You don't want to just start. You can't just tack on fee after fee after fee, because all of a sudden, it's $500 a month for rent, but $500 in fees a month. That they're not, at the end of the day, for the tenant, the biggest thing is you can get creative with how you structure it and how it looks on the surface, but at the end of the day, all they care about is how much money is coming out of my account each month.
Yep.
Well,
and that's why I like that you guys focus on that, because increasing the rents, it's very doable, especially if you're far below market. But you have to think that does hit the pocketbooks of your tenants, of the people that you're serving. And so if you can find these other ways of increasing the NOI for your property, that doesn't hit the pocketbooks of your tenants directly in the term of a rent. In my opinion, that's an easy win there. Especially when you're talking about leasing out roof space. That is one I have not heard. You're talking about leasing out roof space for maybe an antenna for a 5G network or anything like that?
Yeah, we haven't. I can't speak from experience on that one. We've tried to. There's companies out there that will kind of just do the whole process for you, but I've heard of other people doing it. I haven't. None of our properties were in the right location. I think right now I think you might have to be in kind of more major metro areas where I don't even really know what the criteria they're looking for is, but I've heard of people doing it, and I mean, it seems like an easy way to boost income. So it's worth a shot to see if your property's in the right location.
Yeah, for sure. So let's go on to expenses. Reducing expenses. If you're seeing something with an operating expense ratio of like 60%, there's opportunity there to reduce the expenses. What are the big things you guys look at when you're looking at a multifamily that maybe has a high OpEx?
Yeah, I think so. I mean, really, just kind of look. A good one to look at is contracts. If you see the trash or the cleaning contract is X dollars per month, and from experience that you have a different property that's similar size and trash is only this amount per month, that could be a way you shave off a little bit of money each month. It could be in the form of management. Maybe the previous owner was paying a 7 or 8% management fee, and your property manager will do it for 5%. Maybe you can cut back hours on an on-site staff, and manage more efficiently through technologies, through outsourcing with, a virtual assistant. Maybe you can implement some technologies that don't need to necessarily be done on site, and property manager only is on site 20 hours a week, and all the other tasks are done through a virtual assistant overseas, and you're paying them $4 or $5 an hour instead. So just, I think, kind of looking at, I will say though, from experience too, that don't get too carried away with it's a strategy to cut expenses, but don't necessarily think that if it's a 60% expense ratio, that 2 months after you buy this property, you're going to cut that thing down to 50%, and there's going to be no changes, and you'll be good. All you got to do is just shave here and shave there. If that's your strategy of I can decrease expenses by 10%, and that's my value add strategy on your performa it out over several years. Don't just come in and think day one, I'm gonna cut this person 20 hours, cut this, and there's gonna be no effect to the property. That sort of stuff, it really takes some time. At least plan for it. Maybe you will actually do it in 2 months, but assume this scenario that it's going to take you at least a couple of years to get down to that expense ratio, because you'll thank yourself when you get in there and you find out this or that, and all of a sudden your expense ratio is the same as it was before or even higher.
Yep. No, that is good advice. Although we just had a mobile home park out here. The expense ratio was absurd. It was like 70% OpEx. And their main issue was they had underground water leaks. Super easy fix. The bill went from 40,000 to like the water bill went from 40,000 a year we're projecting it out now, but we reduced the cost by about 75%. So that'll reduce the OpEx just in that alone by a huge amount. So there are good opportunities out there if you can find them. But I do agree that if you're reducing operating expenses, you do gotta amortize it over a few years to be safe. So now we're going on to the last one, and this is increasing rents. This is a hard one. I mean, especially if if you have a full occupancy, if you have 100% occupancy in a large multifamily, and your strategy is to increase rents, it always stirs up some resentment with the tenants. So how do you guys go about doing that most effectively? Say you find a property that the market rents are 300, it's at 200 right now. How do you go about getting up to market when you purchase the property itself?
Yeah, I think our approach on it has been to, up rents. Obviously, you got, if they have a lease, you can't up until the lease is expired. But if it's a tenant that's, real tenant that's been there a long time, look at their history. If you buy a property and there's been a tenant that's been in there for 6 years and they're paying this amount of dollars, it's almost not worth it to me to go in and jack their rent up, right when it expires, because you could risk losing a good tenant. I think you also, while you want to be aggressive with getting the rents up and getting the NOI up, you can't forget that, the tenants really make the property. That's really what's gonna, having that money coming in, and then a reliable tenant is worth a lot more than $100 more per month at the end of the day. They'll keep the property clean and safe. So I think you kind of have to weigh that factor in as well. And there's been, times where there'll be certain tenants where they've been there for a long time, so we may not increase their rent as quickly. But on the other hand, if you're gonna increase the rents, it's a lot easier, right, when a tenant vacates and then you're just looking for a new tenant because you don't have to deal with, oh, my rent used to be this and now it's this. If they are going to renew their lease and you want to increase their rents, I think you really just have to highlight the facts of, you might go in there and obviously, 99% of the time, if you're going to increase rents, you're going to do some sort of improvements to the unit. So maybe you're coming in and said, hey, I know we're going to increase your rent $200 a month, but look at this, we're putting in new floors, we're going to replace your fixtures, get some nice lights in here. We'll do this and that, get you a new fridge. And all of a sudden they're more okay with it. And it could be a little bit of a negotiation. Maybe they say, I'm only willing to do 100, 150. And at the end of the day, you have to make the decision. Well, if they're not willing to budget all on rent and you want to get these rents up, then maybe you just, you look for a new tenant because your lease is up anyways. So I think it's kind of a balancing act. We have to kind of weigh the risk and reward, as to, losing that tenant or having to find a new one.
Yep. And I like that. I like that you put loyalty over maximum revenue. I am 100% in the same boat. Keeping somebody around who's been there a long time. I mean, they've already proven themselves. They are a loyal tenant. They're there for the long haul. And it's much more valuable to have them than to squeeze a few more dollars out of that. And it improves the relationship with the tenant. So love that you said that. And with that said, we have blown through our time. So I got to push you into the quick question round. You ready?
I'm ready.
All right. It always starts out with books because I'm a big bookie. So why don't you give us 2 book recommendations? One for your favorite life wisdom book and the other one for real estate.
Life wisdom. I like the 10x rule by Grant Cardone. I think that's a good mindset, think big type book. Real estate. I'm trying to think of one that's not, probably might not have been I've said before, but I can't think of one on top of my mind. I know I got a whole bunch of that bookshelf, but I'm bad at remembering names. So I'm gonna go with probably one everyone else says, Rich Dad Poor Dad.
Yep. That's been said probably 50% of the times people say Rich Dad Poor Dad. So I love it. No, it just goes to show that book has impacted many people. So if you haven't read it yet, go get it. Rich Dad Poor Dad. It doesn't give you a lot of tactics, but it gives you a good motivation, a good reason to start investing in real estate. So good book, definitely. Going on, and this one is for your younger self. So if you could go back to the Brock who had no experience in real estate, go up to him, shake his hand, look him in the eye, give him one piece of advice moving forward.
It would have been to just start learning about real estate at a earlier age. Just start maybe reading books. Back when I was in college, maybe just started the process of education earlier. And just start meeting people in the industry, networking, and just really building that base of education. Because I think that's a hurdle you kind of have to, when you first get started real estate. It's going to take at least a year to really build a solid education to go out and start doing larger deals. So if I could have started that process earlier, I'd say that's what it would be.
Yep. I love it. This is an opportunity for you to flex a little bit, brag. What is your superpower? What are you absolutely good at, amazing at?
I'd say anything relating to being analytical. So that's why the underwriting kind of naturally what was a fit for me. I like doing stuff behind a computer. So anything that comes with building spreadsheets or creating systems, that's what I like to do.
Cool. I love it. And here you are on a podcast doing the other things in real estate. All right. And then for your places, so where are you really excited to invest in right now?
I'm excited to continue to build our portfolio here in the Milwaukee, Wisconsin area. So my partner has an in-house property management company, so that's been nice as we're kind of able to plug into a vertically integrated system. So just continuing to grow here and build connections here with some of the players and yeah, for now that's the goal.
Perfect. I love it. Yeah, people always ask, where should I be investing? Where should, in the United States, where should I be investing? I always say just invest in your backyard. You know the people there, you have the most connections, you're most familiar with the area itself, with the values of properties. There's always value. It doesn't matter what location you're in. I mean, that's not exactly true. There are some bad markets, but generally every market is going to have some upside. So invest in your backyard. That's the best location you can be at. And then on to the last question. This one's for the listeners. You've given us a lot of good advice so far. So how can people reach out and get in contact with you?
Yeah, so we have a website that's www.smartassetcapital.com. I have a few ebooks on there and different stuff relating to asset management, underwriting, a few other one-off topics, as well as and if you punch in on the form there, that will go directly to my email, so I can respond to that. Also on social media, trying to post a lot of real estate content there. On Instagram at Brock Mogensen, first and last name. Trying to be active there too for educational stuff.
Perfect. Well, hey, Brock, thank you. Thanks very much for showing up on the show. I had a pleasure talking with you today.
You as well, Gabe.
Awesome. And for everybody who's here with us today, thank you guys for showing up. You are the reason that we do this, so we appreciate having you here. As always, if you have any questions, reach out to the Real Estate Investing Club at therealestateinvestingclub.com. Other than that, I hope you guys have an absolutely fantastic week. Sorry, actually, it is weekend. We're on Friday right now. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode as much as I enjoyed putting it on, and we're able to pull some actionable advice that you can apply in your own investing today in the field. Before you go, we have a gift for you. If you're a new investor looking to get started or an established investor looking to take your investing to the next level, I've created an ebook just for you, available on our website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find deals that are actually deals, how to finance a deal with little to no money down, and how to exit those deals for maximum value. And if you get the ebook today, I am throwing in a bundle of bonuses, 7 of them to be exact. The first one will be the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating wealth in real estate. The second bonus is the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools, systems, and even the vendors we use to see the success that we do. And the third bonus is the top 100 best performing keywords pack, which will give you the exact keywords we use to target motivated sellers online using PPC ads. The fourth bonus is our contracts bundle for wholesaling and renting real estate, which will give you access to all the contracts we use in the field to execute all different types of transactions. After that is the Investors Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automatically from those calculations. This is a lot of bonuses that I said. I'm just going to keep going down the list. Number 6 is the Investors Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And the last bonus is the Wholesalers Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. Whew, that is a bundle. So it's a mouthful. You get all of those bonuses for free when you download the ebook. All we charge is the admin cost to run the show. So if you're interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page to take advantage of that deal. And with that said, I hope you have a fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.